Now let's see some examples of charts and candlesticks. So coming here, just type charting IQ, most chart IQ. Okay, so here we have an example of a chart. So this is a technical chart of AAPL. AAPL is nothing but Apple Incorporation. So AAPL is basically the code of Apple Incorporation in Nasdaq. So the current price shown in the search engine is 146.55 USD. But of course, there is a lag in the live price and what search engines give us. So always follow the live price. So this is basically an example of a chart, as I said, where you can see several candlesticks. So these candlesticks are formed based on how the traders trade. So if you can zoom it, see now here, if you observe, here you can see this is an example of a green candle or a bullish candle. So the price opened at 131.74. Right side margin, you can see the price 131.74. It came down a bit to 131.4 and then all the way climbed up to, this is the high, 133.15, and then closed at 132.93, making a green candle. So this is an example of a bullish candle. Now let's see a bearish candle. So this is a red candle, a bearish candle. So the price opened here. It went all the way up. Initially, everyone thought it is making a green candle, but from there it fell all the way around, making an upper wick, and then fell again. So the stock became bearish, came all the way around to this point, 131.85, and then finally closed at 132.4, making a red candle. So this is an example of a chart and several candlesticks. Now we will be discussing in detail about these candlesticks going forward. So coming back to our presentation, let's see different candlestick patterns. So you have basically bullish candlestick patterns, bearish candlestick patterns, neutral candlestick patterns. So there are several classifications for this candlesticks. So we have to understand, as a trader, we have to understand how we have to behave based on the candlesticks formed. So considering bullish candlesticks, we have single bullish, double bullish, and three stick bullish patterns. For bearish also we have single bearish, double bearish, and three stick bearish. So let's consider bullish candlestick patterns first. Under bullish candlestick patterns, we have plain bullish, hammer, Marbosu, bullish piercing, bullish engulfing, bullish harami, and morning star. I'll be discussing in detail about all these patterns. So let's see how it looks like. Coming to bullish candlestick patterns, plain bullish. So this is an example of a plain bullish candle. This is an example of hammer. So whenever you see such kind of patterns, you have to identify what it is. By seeing this, you know it is a plain bullish. By seeing this pattern, you have to understand that it is a hammer. It looks like a hammer with a head and a tail. This is an example of bullish piercing. Bullish piercing means we had a red candle formed. Suddenly, the next candle is becoming green. That is, here there was a fall in the price. The very next candle is showing you a upward movement. So wait for this candle to complete. So when this candle is formed, you have to see the closing price. So the closing price is above the median of the red candle. See, for the red candle, it opened here, went up all the way, came down, made a lower wick and closed here, making a red candle. Whereas green candle, initially it came down, then it started moving up till here and then closed here. So this closing price is above the median of the red candle. If you see such a pattern, it is called as bullish piercing. Now the basic idea of all these things is, whenever you see such patterns, you have to understand that the market is going to be bullish or there will be an increase in the price. Say for example, currently Reliance is trading at 2400. Suddenly you see at 2400 a price increase and a green candle is formed. That means Reliance can go further up from this 2400 2500 range. Now coming to bullish engulfing. So this is how a bullish engulfing looks like. Here we have a red candle. Suddenly the next candle is becoming bullish and closing above the median, as well as engulfing the body of the bearish candle. That is, the bearish candle's body has been swallowed by the body of the green candle. So it engulfs, as the name suggests, it engulfs the body of the bearish candle, making a bullish engulfing pattern. Bullish harami. In Japanese, a harami means a pregnant lady. So here we have a bearish mother or a bearish candle, and we have a small candle, looks like a child, a bullish candle. So if you see such pattern, the market is likely to go up. So this is an example of bullish harami. So plain bullish and hammer are examples of single candlestick patterns, whereas bullish piercing, bullish engulfing and bullish harami are two stick candle patterns. Coming to morning star, this is an example of a 3-stick candle pattern. So 3 candlesticks make together a group. So how to interpret a morning star? So this is an ideal case where we have a red candle. There is a gap down opening. Gap down in the sense you can see this is the closing price of the red candle. There is no trades between this close and this open. So there is a gap down and a small candle is formed. And the third candle, so this candle is bullish. It closed here. Gap up opening for this candle, and it is closing above the median of the red candle. In such a case, we say it is a morning star. So whenever you see such patterns, go ahead and trade as a bull.